What's up YouTube, it's Louis here. I hope you're all well. I'm finally back. Sushi is behind me if you can see her. Oh, just over there. My new puppy, Japanese chin cross Chihuahua. So that's what I called her, Sushi. But we're looking at Quant, and thank you guys for still being here on the channel and supporting the channel on the daily or whenever you guys can. So we're looking at Quant, and you can see on the weekly, since hitting this 55, as I said, nothing has happened. So if you remember correctly, and you can go back to the video on that week, so once that weekly candle closed on the 18th of July, if you go back to the videos on the 18th of July, if you can be asked, I would have been telling you guys, now we're at the 55. Don't expect Quant to just fly out of nowhere. We did get one further pump into our $130 target with a further target at 150, because that is the psychological level we've been focused on, this bear market level, the level that I was actually able to tell you guys, even though I had hate at the time, I was able to tell you guys, this is not looking good. We're going to $70. And the amount of trolls I had over here when we started heading back up here, and I said, guys, no, we're still going to 70. They were like, oh yeah, Louis right. But then we went back to resistance and they're like, no, Louis wrong, haha, getting trolled. And then that massive wave down happened. And we went down to 70, and I said, no, we're going to 50. And yeah, we went to, eventually, I think we went to 46 or something like that. But yeah, holding 50 as a psychological level, that's what this green line here is, $50. And that's basically since been our bottom with the weekly candle closes, sorry. And this white line is not a random scribble. This is the Quant Bitcoin BTCUSD chart. I don't know how to explain, but if you look at your Quant chart, I don't think you have as much data as this going back all the way to 2018. So if you want this chart, it's the first thing in the description, or in the bio or in the description. It's not even a link. You just need to basically copy it. You just need to copy this and paste it, and it's obviously just straight under the video. So if you appreciate me trying to help you with that, like, subscribe and comment. We're trying to hit 3.5k as soon as possible, guys. I really appreciate all the support on this channel, and yeah, I understand that everyone's going through a tough time at the moment with the world, and of course these stupid cryptos as well. We're all in the same boat. So let's go over to the daily time frame now. Again, this is the 200 EMA appeared for the first time, because this is the chart that goes back to 2018. This is showing us that, yeah, this is a very strong support. You can see usually when you're above this, it's telling you that the weekly time frame is bullish. As long as you're above this 200 EMA, and you can go check this on any time frame, if you're above the 200 EMA, you will always see bullish continuation. If you are under the 200 EMA, you will always see bearish continuation. So the fact that Quant is above this on the weekly time frame, it tells you that you're weekly bullish. But does that mean we can't come down? No, we can come down, and we've always had this prepared since hitting that target over there. I've been always warning you there could be this big M pattern forming, and it didn't play out first, but it could still play out, and it could even become a worse pattern like a head and shoulders, and we'll get into all of this. But if you're appreciating the video so far, please smash the like button. Let's get on with this. So we have this potential M pattern forming here. A lot of the bearish pages on Twitter were talking about it, and so I was going to talk about it too, because we want to look at this both ways all the time. And so I was telling you, if you get a close below that body, you're basically going to come back down to this W pattern's neckline. And because it was never back tested as support, we didn't do something like this to hold it and go up. Basically, we didn't do exactly what we're seeing over here, down there at the W. So that's what we really wanted to see. You see the break of resistance, confirmation of support, continuation. We didn't get that. We just broke above it and continued. So that is like a gap. You could, if we do break below this, that's your target. But because it's never confirmed the support, you could fall straight through it, and that is the true support. So $50 going forward is so important to hold, guys. $50. Now again, if we're looking for some more targets, some more pinpoint targets, I'm going to go from this low point over here up to this highest point, the low being 37, not 46, my mistake, 37, and the top over here 134, which I was able to give you because it was a fib retracement target, the first 1.272. Let me get rid of these other fibs for now. 1.272, as well as it being an ascending triangle, which I gave you as a trade over here with the target at 130, just like that. So we had that confluence at 130. Although 150 was the 1618, and this was also the level I was able to tell you, okay guys, now we're entering, you know, this massive downtrend because of this massive head and shoulders over here. It was, yeah, just a warning sign. So going forward, another warning sign, because on the weekly time frame you're not above the EMAs. Can you see you're not above the 55? Let me get rid of this blue one. So the purple one, the 20 EMA, the orange one, the 55, the white one, the 200 EMA. if we're below the 55 on the weekly, that's extremely bearish. That's basically acting as a double brick wall. It's what's not allowing us to be completely bullish on the weekly. However, being above the 200 is just telling you, yeah, long term you're good, but in the short term, because we have rejected the 55 on the weekly time frame, don't expect any movement. That's what basically happened since here. We've gone weeks without doing much, and now we're just in this consolidation zone, basically trapped between the 20 and the 55. You can see that you are below the 20. This is basically a confirmation of that with that candle there with the wicks going up. A very negative statement. However, you are holding this base support, and that's on the daily time frame. Not only that, you're holding the range low, $83. So if we can keep above this, you're stuck in this range, and so this is the range low, and if we're trapped in this range, then the range low is going to act as support, and we should always bounce off of it to go back to the range high basically. So that's what should be seen if obviously Bitcoin is going to allow us to do so, and that's why eyes are all on Bitcoin. And that's, I know that you guys are not in Bitcoin, but it's the most important coin to keep on top of. So, and this probably the easiest chart in my opinion. That's where I gained all my confidence. I started on Forex, eventually going over to crypto because my mentor told me so. He also told me what coins to get into, and yeah, I just found out that, yeah, crypto's much better, and it's much easier to gain confidence because patterns pan out more often than on Forex, because Forex, all the money in the world is obviously going to be the most manipulated. When there's less money in something, it's going to be less manipulated. The bigger something is, the more manipulated it is. So if we're talking about Forex, that's pound, dollar, yen, euro, you know, come on guys, they're all like almost in parity right now. So that's why I moved over to crypto, because you don't even need leverage. You don't need leverage whatsoever. What I prefer to do is just invest, trade. So I have my investments. I also put more money into these investments as short-term trades. So once they go up, you know, 100 whatever %, I can sell that or decide to keep it or whatever, but leaving my investments in there as well. So let's just put these final fibs before we leave. And you can see the 6-1 is landing here at about 60. So I'm going to draw that out now, because I do like drawing a golden pocket, and we know going forward, this is the level you sort of want to stay above at all costs if you want to get this bullish continuation. So something like that. If we were to lose this, come back down into here, and we want to actually see a W pattern like that forming, something like this. But of course, if you fail to hold this, you create something called the reversal wave like this. And then this is where you could come down to these nasty targets down here. But that is not going to happen as long as we're above the golden pocket. But really, guys, I like drawing the golden pocket because I told you when I was new to Fibonacci's, this is the goal. I always drew this golden pocket. But we don't just solely rely on one indicator. We have to look at price action. And price action says there was a resistance when we first hit this golden pocket. You came down and found support there. And this is why I'm telling you guys right now that, in my opinion, even though yes, you're losing the golden pocket, you don't want to see that happen. You can come as deep as the 786 as a retracement. So you can have this impulse come all the way down to the 786. You just must reclaim that golden pocket again to see this bullish continuation. And you can see that'll be a massive W pattern. But again, don't be disillusioned and watch today's Bitcoin video, because I've explained how we could be creating this reversal wave, and the level on Bitcoin that we need to hold is 18.6k. But if we're talking in terms of quant, that same level is $50. So thank you guys so much. Please, if you're new, subscribe. If you're a returner and you haven't subscribed yet, subscribe, comment as well to help the algorithm, and please share this video so we become the #1 viewed quant channel on YouTube, and all these disgusting moon boys. But thank you. I'll catch you in the next one, and as always, peace.